All right, so you're here because you really want to get what's going on in crypto right. Like, no BS, just straight to the point.
Yeah, absolutely.
I think that's why people keep coming back to this show.
Yeah.
Well, today we're looking at something that I think is really interesting. It's about this whole Binance thing.
Okay.
They haven't listed Picoin.
Right.
And it's got a lot of people scratching their heads because, like, Pi Network, with millions of people just mining it on their phone,
Right.
it seems like kind of a no-brainer. So we're going to try to unpack this and figure out what is going on.
Yeah, you've got this massive community that's really engaged in the Pi Network. I mean, they're drawn in by this idea of like really accessible cryptocurrency, right? Just using your phone to mine.
Yeah.
It's fascinating. It's a really fascinating social experiment in many ways, I think. But when it comes to an exchange like Binance listing a coin, there are some real fundamental criteria that need to be met. So our mission in this deep dive is to kind of get under the hood and figure out what are those crucial factors that have led to Binance's decision.
Okay, so one of the first things that keeps popping up is this idea of an open mainnet.
Right.
So for those of us who are not fluent in crypto, what is a mainnet and why is it a problem that Pi Network's mainnet is being described as enclosed?
So think of a mainnet as like the live, fully operational blockchain. It's where real transactions actually happen, where balances are actually recorded. It's the public ledger in its final form. Now, what Pi Network has right now is what's called an enclosed or a closed mainnet. So it's kind of like running a financial system in a test environment with limited access. And so while that might be useful for ongoing development, it's not the fully open and permissionless system that really forms the backbone of most established cryptocurrencies.
So instead of a bustling public marketplace, it's kind of like a private club.
Precisely.
Where only certain things can happen.
And for Binance, this immediately throws up a few roadblocks. They need to see a fully functional and accessible blockchain before they even consider a listing. The closed nature of Pi Network's mainnet really impacts something called liquidity. And liquidity is essentially how easy it is to buy and sell something. So if something's not really out in the open, it's harder to freely buy and sell it. It also kind of makes you think about transparency, right? Because the full transaction history isn't as readily available for public scrutiny as it would be on an open network. So ultimately, for an exchange that really champions this idea of decentralized digital assets, a closed system feels inherently less decentralized.
Yeah, because if it's all behind closed doors, you lose that open market dynamic. Like the natural way a price is established.
Exactly.
So it makes sense why an exchange would be cautious about that. But it's not just the tech. There's also the whole regulatory question.
Absolutely.
Hanging over Pi Network.
Yeah. For major exchanges, like Binance, regulatory compliance isn't just a suggestion. It's a fundamental requirement. They are operating under the scrutiny of financial authorities worldwide. And the information we have suggests that Pi Network has faced questions regarding its compliance in various jurisdictions. And when a cryptocurrency isn't openly traded and doesn't have that clear regulatory backing, listing it on Binance can open them up to some considerable risks.
So, like, what kinds of risks? Because I think for a lot of people, regulation is this kind of abstract concept. Like, what does that actually mean? What's a tangible downside for Binance?
So think of regulatory approval as basically the license for a crypto to operate in the mainstream financial world. Without it, Binance risks some serious repercussions. Exchanges are obligated to comply with anti-money laundering laws to prevent their platforms from being used for illicit activities. There's also a concern that regulators might classify Picoin as an unregistered security. Depending on how it was distributed and what its intended uses are, listing an asset like that could lead to significant fines and legal challenges. So it's not just about filling out forms. It's about the legitimacy and security of the assets that they offer.
So that really puts it into perspective because it's not just a technical evaluation. It's really like navigating this complex legal landscape.
Absolutely.
Now, another point that's been raised is about centralization. And we talked about how Binance favors decentralization. But it seems like the way Pi Network is set up, that might be raising some eyebrows.
Yeah, that's right. The analysis we have suggests that Pi Network's developers currently maintain a high degree of control over the network and its ongoing development. And this stands in stark contrast to truly decentralized projects like Bitcoin or Ethereum, where the development and decision-making is distributed across a much wider network of participants.
So it's kind of a question of who's calling the shots.
Exactly.
With Bitcoin, there's no like one company or one single entity that's in charge.
Exactly. The core principle of decentralization for many in the crypto world is about removing single points of control and potential failure. It's about distributing power to really enhance trust and security. So Binance, as an advocate for this decentralized ethos, might view Pi Network's centralized structure as a potential weakness. Or a deviation from those core crypto ideals. And so this concentration of control could raise concerns about the network's long-term resilience and its potential vulnerability to censorship or like unilateral decisions.
Right. It makes you think about the core promise of crypto is that it's decentralized.
Right.
If one group has too much control, it kind of undermines that whole thing.
Exactly.
Now let's move to something that I'm sure a lot of Pi Network users are really interested in.
Yeah.
It's the fact that it's not really tradable on major exchanges. And that seems to be another major sticking point for Binance, this lack of what they call external liquidity.
Exactly. Binance has been pretty clear that they require healthy trading activity, liquidity, and a strong market presence for any cryptocurrency that they consider listing. And as we talked about with the closed mainnet, PiCoin currently lacks that external liquidity. It's not freely available for trading on decentralized exchanges or other platforms outside of its own ecosystem.
So can you just explain that? Because why is that so important for an exchange? What does it mean in the real world to not have that external liquidity?
So imagine you're trying to sell a significant amount of PiCoin. If there isn't enough liquidity, you might struggle to find enough buyers at a stable price. And that's a major concern for any exchange that wants to facilitate trading. Without that robust trading activity, you also have a higher risk of price manipulation, where a few large holders could influence the price without much resistance. And ultimately, it really hinders genuine price discovery. The value within a closed system may not actually reflect what the broader market thinks it's worth.
Right. You want to know that there's a real market there. With enough buyers and sellers that a real price is being established.
Exactly.
Okay, now this leads us to something that I think is really interesting. And that's the fact that there's this massive global community that has sprung up around Pi Network. I mean, millions of people are mining it on their phone. There's a ton of enthusiasm. But it seems like sheer numbers just aren't enough.
Yeah, that's a crucial point to understand. While a large and active community definitely indicates interest in potential community size alone, does not guarantee a listing on a major exchange like Binance. They have to prioritize those underlying fundamental criteria we've been talking about: the tech, the security, the regulatory compliance.
So it's kind of a reality check, I guess. You have all this excitement, all this anticipation, but Binance is really operating with a different set of priorities.
Absolutely.
It's interesting to remember that Binance hasn't completely ignored Pi Network.
Right.
They even had it listed as an unlisted project that they were observing in their innovation zone.
Right.
So what can we read into that?
It suggests that Binance was definitely aware of Pi Network's significant user base and its ongoing development. Listing it as unlisted in their innovation zone was likely a way for them to keep an eye on its progress, gauge its potential, without immediately offering it for trading, which carries more risk. It's like saying, we see you, we're watching, but we need to see more progress before we take the next step.
And it's also worth noting that some other smaller exchanges actually went ahead and listed what turned out to be unauthorized versions of PiCoin, which caused a lot of confusion. The Pi Network core team had to actually step in and clarify that no official listings had been approved. And I'm sure that whole situation did not instill a lot of confidence.
It definitely added a layer of complexity and uncertainty. Unauthorized listings can be problematic for a few reasons. They can mislead users, create artificial price fluctuations that aren't based on genuine market activity, and they can ultimately damage the reputation of the project and the exchanges involved. And so the Pi Network team having to publicly disavow these listings really underscores the importance of official announcements and the risks of premature or unverified trading.
So given all of these kind of significant hurdles, the closed mainnet, the regulatory uncertainty, the centralization concerns the lack of external liquidity. What concrete steps would Pi Network actually need to take to maybe someday get listed on Binance?
So the path forward seems pretty clear based on what we know about Binance's criteria. First, and this is non-negotiable, they need to launch a fully open mainnet. That would enable true decentralization, transparent transaction verification, and the free trading of Picoin.
Cool.
Second, they must achieve regulatory clarity in key jurisdictions to satisfy Binance's compliance requirements.
Right.
This might involve actively engaging with regulatory bodies, ensuring their project aligns with relevant financial laws.
Okay.
Third, they need to foster sufficient liquidity and genuine external market participation.
Yeah.
This would naturally follow an open mainnet launch as the coin becomes available on other platforms and real trading activity begins. And finally, addressing those centralization concerns by transitioning to a more decentralized governance model.
Yeah.
Giving the broader community more say in the network's future would be really crucial.
So that's a pretty big to-do list.
Right.
And it sounds like until those things are checked off the list, a Binance listing is pretty unlikely.
Yeah, that's the most probable scenario.
Yeah.
While community support is undeniably valuable for any crypto project, major exchanges like Binance ultimately prioritize the underlying technology, the regulatory standing, and the market readiness when making listing decisions.
Okay, so to wrap it all up, Binance's stance on Picoin, it's not arbitrary.
Right.
It's really rooted in some very fundamental principles of what makes a cryptocurrency viable.
Exactly.
To be traded on a major platform.
It needs to have an open and functioning network, clear rules from regulators, a truly decentralized structure, and a healthy liquid market. And even with a massive user base that's eager to see it listed, these fundamental elements just cannot be overlooked.
So Pi Network's journey really highlights the challenges and the stages involved in this whole evolution of a cryptocurrency.
Absolutely.
From initial concept to community building to achieving mainstream adoption.
Right.
And while their mobile-first mining approach has been really innovative.
Yeah, it's definitely interesting.
In growing a huge network, addressing these core technical and regulatory challenges is really paramount for broader acceptance. And it makes you think about the bigger picture.
Right.
What are the lessons here for other cryptocurrencies?
Right.
What do they need to focus on to get that wider acceptance and get listed on those big exchanges?
Exactly.
It's definitely something to think about. Thanks for taking this deep dive with me.
Absolutely.
Really appreciate it.
Yeah, thanks for having me.
I'm sure we will be talking again as soon as this whole thing unfolds.
For sure.
All right, everybody, take care.
See you later.